here is the closing swing low from yesterday, right here at 31.75. Market opened lower, came up to it. Look at that. Great trade. Then it came up again, went lower, right? I don't know if this was VPOC or not. My guess, looking at just the distribution of price, that this was right around VPOC. What do we have? Weakness, weakness. What's at risk? The upside. Went up just a couple ticks shy of this closing swing high, and then failed. Now, if I were trading in the overnight and we start trading in the European session, we came through closing swing high, and in the European session, I was building a volume profile, and lo and behold, there was a low volume area that the intraday session for the European session created here at 33.75, 33.50, maybe at 33.25. Guess what I would be doing? I'd be looking for a long right down here. I'm looking for the bid to be weak, the offer to start getting strong, and I'm long, expecting price to move back up, possibly to the US high. Also, it didn't do that. So once it came back down through this level, if this is European session shows this is a low volume area, comes back up to it, it fails, I'm short. What am I looking for? Most likely looking for VPOC. I actually think this is the session VPOC and possibly lower. Let me go back here. Yeah, looking for this level. VPOC was up here, but it failed to get up through there. In fact, look at where it died in the overnight. The move to the upside, right below opening closing swing high, but look at that, right at the VPOC from yesterday. And what do we just learn today? If buyers aren't willing to take price through and see this as fair price, we don't get rotation here, what's likely to happen? It's likely to go hard and long, hard in the other direction. And that's what it did. I mean, once you understand these principles, I guarantee you'll start looking at, and this is what I do. If price is moving, let's say price has moved huge on the ES, it's moved 20 points, 25 points, and it's coming to a previous high volume area. You know what I'm doing? I'm looking at that high volume area going, that could be a phenomenal trade. If it's coming down and it hits this high volume area and sellers are no longer willing to take it through that high volume area, I can tell you 9 times out of 10, you're going to get a tremendous bounce off of that previous high volume area. At least you know you've got a trade to take up to the higher low volume area, the unfair high. So I hope what you're starting to see is, and let me see if I can get an oil chart up because I want to, okay. I have an oil chart, but no data. Let me see if I can reload my data here. All right. Found it. So here is oil, CL, and this was the overnight session. You can see a low volume area right here. low volume area right there. Price came down, bounced back up. We got a double top high. Once price moved below this area, and this was pre-market, once price moved below this area, look what happened. Came back up. Hopefully you can see this. I'll try to make it a little bit bigger. Came back up. Where did it fail? Right at that low volume area. Failed and moved lower. In the overnight, it created another low volume area right here. Price moved below that, kept trying to move higher, couldn't. Neutral auction right there. More selling, tried to move higher, finally failed, and boom. And we have not seen this VPOC at all for the remainder of the day. Another low volume area right here. Price moved lower. This is where you had likely a finish. Actually, the finish was probably right here. And then it re-engaged. Sellers, you can see the momentum through this low volume area. That's when you see that, you see the momentum coming through there, you're looking for a short back up at this low volume area. And if I take this into from structure into print, go back to that level, just show you what happened. Price came through with all of this momentum, VCA showing activity, the volume of activity coming in at the bid, a little bit of buying. This looks like this was in fact releasing of inventory, and came back up, failed. We start getting strength back into the bid and lower. I love that toggle. So even in the volume profile for oil, here's the overnight. You can see trade opportunity here. Market opened, and this was, oh, look at this right here. High volume area right there. There's responsive selling off the high volume area. Not a good sign for oil. What's a naked VPOC, I think, is kind of your question here. Let's just say for today, our VPOC right now is 2450. Let's say it ends at 2450, our VPOC, and it starts moving lower for the day, and it closes and opens below 20. Until this VPOC gets tagged, or we have activity at that level again, it remains naked. It remains open. And the probability is we're going to see that filled. I won't tell you that it's going to be the next day or the next day, but when price comes back up to that level, and let's say I'm in a long trade and price is coming back up to 2450 and it's a naked VPOC, trust me, I'm scaling out at 24. I'm looking for a bounce off of 24 quarter, 2450. May come through, but I'm scaling out in front of it. So a naked VPOC is just one that hasn't been touched in the RTH session, regular trading hours session. Yeah, I will. Tomorrow morning, I can show you the. We'll go through the opening and closing range and how I create those. But I wanted to show you the oil chart today and show you again that volume profile is volume profile. The attributes and the elements that you've you've learned today about volume profile, right? Finish, areas, low volume areas. You can see a distribution here, a distribution here. This is typically known as a double distribution day. If price now comes back over this level, you would look for a long. This might be at the end of the day, potentially back up to this high volume area right here. Otherwise, this was a short once it came through on a retest. And now with oil, I'm either looking for price to settle here, right around this 97, 38, 39, 40 level, or I'm looking for it to open the auction up and extend further lower, or I'm looking for this to come back above 97.65 and back up towards these high volume areas, back up towards the 98 area. So I can develop and I wouldn't do anything with oil until after 1 o'clock Central, 2 o'clock Eastern. But I can start develop a trading plan, and when I see activity in the print that supports one of those scenarios, if the scenario being supported is that it's likely to close around VPOC, I'm done. I don't do anything with oil. If we start breaking that auction to the downside and start opening it back up, then I'm looking for a short at that low volume area to take that. I would look at a longer composite to see where I would take that to. So a normal distribution, VPOC near center, good bell-shaped curve to the distribution. Price moves to and from high and low. Again, watch for signs that one side is holding more than the other. You'll see that in high volume area at one extreme or the other. And when price fails to get through VPOC and heads toward an edge, just know that that edge is at risk. So if you're into a day and let's say the morning we get this nice bell-shaped curve, we've got price moving above and below it and above and below it, and something happens around 10 or 10:30 or sometime, and price is moving lower, and it just gets stuck here, just stuck. Can't get through this area and starts moving up. Do not short the top of the day, because the most likely scenario is you're coming through. It's hard to take a long off of this area, but if you get a couple of prints that shows weakness at the bid down at VPOC, you can take that trade. Your risk is maybe a couple of ticks to the downside, because if it comes through, it's likely going to rotate lower. You don't want to be in the trade, but it's an opportunity. It's an opportunity because if this trade works and buyers step in and push this back up to the top of the day, you're going to scale here and you're going to be able to take this trade through the top of the day and higher. And you'll start to see another distribution start to build above it. All right. How about chart settings, templates for ES, CL? Yep. One of the things you're going to get are all my templates. You will get my templates. Do I mean 1 p.m. Central for CL? Yes. 2 p.m. Eastern. If I said Central, I apologize. 1 p.m. Central. After 1 p.m. Central, I'm looking for oil to either die around 97.39, or I'm looking for it to test. Let me just show you. I'm looking for oil to test here or down here. This actually might happen before that time. I'm looking for it to test here or down here. You got to be careful with oil. A lot of times this one of the nuances of this instrument is you go 3 ticks down below this level and 20 ticks in the other direction. You got to taking breakouts on oil can be one of the most pleasant, joyous, fantastic rides you've ever had in your life. But a lot of times it can be the most painful, frustrating experience you will have in trading as well. It's you got to be careful with breakouts on oil. Out-of-pocket experience. That's great. I love it. Brooks says it can be an out-of-pocket experience. I can tell you, oil has I like trading oil, but I'm very careful with it now, and I've added a couple of different nuances to my oil trading to help me with my get confirmation on some levels. So, but it can be very frustrating. The fact that a volume shift at the low, isn't that a condition indicative of acceptance? Long opportunity? Oh, that's a great question. So if price is moving lower and we get a volume shift, a VPOC shift, because volume means acceptance, isn't that a long opportunity? Well, I'm sorry, you're talking about a neutral day. You're talking about a neutral day, this normal distribution. If volume is shifting low, isn't that a condition indicative of acceptance? Here's what I would tell you. Like this, where you have this volume area way up at the top, if you have a volume area way at the top and you're seeing responsive selling and you've got a finish to the top, with this volume, huge warning flags to you that the reason this volume exists is because sellers are holding. If sellers weren't engaged here, then you wouldn't see this volume profile. What you would see instead is a better finish to this auction and likely buyers taking this into a new area. This volume right here is a strong, strong, strong signal that sellers are holding. And this, if volume is acceptance, this one at the top of this range is telling you that the risk is to the upside. Sellers are in fact holding good as this is coming down. Especially if you get a profile where it's shooting higher and all of a sudden you get a really short finish, but VPOC shifts to the top, and you get weakness in the print at the offer at the top, and you see strength coming in at the bid, go short. And here's the reason. If you think about what's happening behind the scenes in the auction, the reason that volume is being generated, think about it. No price is moving. Price is not moving any higher. Volume is being generated, and this happens a lot. Volume is generated in a big way. There's a lot of activity. If this were buying activity and this were aggressive buyers, then that would instinctively move price higher. But because price isn't moving higher, and we're seeing, again, if you look at the bid and you see weakness at the offer, strength at the bid, you see that coming back into the market, then this volume is telling you that sellers are starting to hold. The opportunity is for a trade back to center. And all you're doing again is in the print, if you get into the short trade, if you see strength coming back in at the offer, meaning you've got more buying, then you get out of the trade and say, in this case, I would say I'm not third time up. If this were to test like a third time up, I'd be a little careful. Third and fourth time up. But what you can say is, I don't need this trade here. I can take a look and see if I got a better trade here. Because now my risk is small and my potential profit is even bigger. So don't be too proud. I mean, there's nothing wrong with taking a trade at break even and getting out of a trade. Nothing wrong with it, even if the trade works. I would rather have somebody read something going on in the print that puts their trade at risk and manage to that what they're reading, because it's telling me that they're staying objective and they're able to think objective, than to hope a trade is going to work and be happy, surprised when it does. Oh, that was a good decision. You can always get back into a trade. Yeah, I'm not good for nervous souls, guys. That's me. I love that comment. It can be an out-of-pocket experience. Have I traded the YM? I have traded the YM and the TF and the NQ, and I have found, and we can take a look at it on Friday when we look at other markets, that this volume profile works exactly the same. The profit in terms of ticks and points, I don't like it as much, so I don't trade it as much. But the volume profile, the elements, and the attributes work exactly the same. Would it be considered absorption due to the long wicks at the top of the can? That's another. Jimmy is asking, is this considered absorption because of these long wicks? And I would tell you, absolutely. This just shows you responsive responsive selling back down into this area. All of this just screams that this market is going to start moving lower. In fact, let me just see something here. I believe, let me just see if I can do this. Yep, we're almost done here. This is that volume profile right here. See the VPOC at the top? Look at what happened to price. Really came down. All right. All right, so I've got this thing of volume profile examples, but we've gone through an awful lot of volume profile examples. I'm trying to think of what else I can show you relative to volume profile. We're going to get into different instruments on Friday, so I don't really want. If I start getting into different instruments today, they're going to be 10 million questions about the nuances of that instrument that I likely won't be able to answer, and we'll kind of lose what we have today, which is focusing on the elements and the attributes of the volume profile. So yesterday was, let's understand the principles of the auction and order flow. And once we understand those things and risk management, et cetera, and how to read the print a little bit, we read the print for point in time, trade confirmation. We look at the print for overall context of what the market's trying to do, how good of a job is it doing. And then we have the volume profile to provide us levels that give us opportunity for trade, and we use the print to confirm that. Once we have that set, now we can start putting these things together, especially with the other volume profile or OFA tools, and start building not only daily trade plans, but how do we go through the day as the market is developing, because we don't know how the market's going to develop throughout the day, throughout the rest of the day. We just don't know. So what can we do so that we are constantly in our minds saying, all right, this is what happened, this is what I'm expecting, so if this, then this. If price does this and I see this there, then that tells me to do this, or that the market's likely to go here. And so here's my next trade. How do we identify that? Because the more that we can do that, the less bias you will have in any specific market, and the more opportunity you will have to take advantage of trade opportunities. So I know if I get into a whole bunch of volume profile examples, and I've kind of already gone through a bunch today, we may lose the focus of today's teaching, which is the elements and the fundamentals, the attributes. So things like every volume profile has a finish. If it's not finished, it's likely going to be revisited. Every volume profile has a VPOC where the most volume is. Value is driven from VPOC. It's the first standard deviation or 70% of the volume away from either above or below volume point of control. Every volume profile has low volume areas. Even if it's a normal distribution, the low volume areas are on the edges, the top and the bottom. It also has a high volume area, and sometimes several high volume areas. And those high volume areas usually are part of an overall distribution that includes a bell-shaped curve. And that bell-shaped curve, the completion of that kind of tells you that an auction is gaining acceptance. So I want to focus on those things and give you time to absorb those things. And good. And give you time to absorb those things. I have a test that I'm going to send to DB, and he can get that out to everybody. So with that, I'll let real quick a quick question of how do you draw the profile using the OFA tool? That is something I want you to be able to do without question. Let me just show you quick what you do to build the volume profile. You select volume profile. You just click it, left click. You put your cursor where you want to start the profile. What data do you want to start it at? You click your left mouse button and then let it go, and then just drag your mouse all the way to the end and click it again, and that gives you your volume profile.
Mark,
that's how you create a
profile. I'm going to jump in here.
Okay.
Just because
great,
we have gone long again, and I don't mind that at all. It's my concern always comes down to the people who have scheduled this into their day, and
Yep.
have some other place to be, and I don't want them to feel like, well, I couldn't, I didn't get all the information or have the opportunity to hear Mark live. So I do want to kind of cut it off. What we've done in the section where we're posting the videos is allow you to put comments or questions in the actual pages so that it becomes a class discussion. So anybody that's being part of this can actually post comments or questions. And I know it's difficult because of the way the videos were segmented yesterday for those of you who have watched them. But in the interest of time, it's very difficult for me to get 4 or 5 hours of video well edited. So we're going to continue to kind of use that path until we get through the week and I can go back through where some of those comments may make more or less sense. But I don't want anybody to feel that they're not going to have their questions answered. I just know that we need to kind of put some sort of edge on this. Mark, you're more than welcome to stay in and answer some more questions. But in terms of kind of calling it a day for the actual class that's going to be recorded, I'm going to go ahead and have George stop the recording so I can get working on that end of it. And once again, I just wanted to thank you for the work and effort that you've put into this. It really comes across. I mean, today was very much an eye-opener for me. I hope it was for everyone else. Again, we really, we welcome the feedback. Constructive criticism is fine. And I think everything I've gotten so far has really been positive. But just wanted to say thanks again, and I look forward to tomorrow.
Awesome. I do as well. And thanks everybody for participating and getting the participating with your questions and comments. I look forward to tomorrow and specifically getting into Thursday. And when we get into Thursday and Friday, there's going to the aha moments. My expectation is the aha moments will really start to come. And my objective would be that you see, I don't want to say how easy this is because it just takes time to read the print and get used to reading the print. And I would tell you, you need to put the time in. But once we identify the levels, how easy it is to see what you're looking for to get into the trade and then to manage the trade. It's really not complex. In fact, one of my guiding principles personally is more is less, and less is more. So the more I add to my trading ideals and so forth, I get less results. And when I keep it pretty simple to these things, I get better results. So I'm going to send you this test, and you want to talk to how it might be distributed?
Yeah, as soon as you get it to me, I'll make sure that it goes up with the videos. So
okay.
You guys can just continue checking that page. But all of the course material, we're trying to keep it very well organized. So if you just go to your course homepage, in the client portal. All of this stuff will kind of be all right there. And so we'll make sure that it's, there's not, did you want to speak to the homework at all? I mean, is there something that you want to
No, the
go
test
over with?
is really just to ask, it just asks questions. Most of them are multiple choice. Some of them are, fill it in. I would just ask you to go through it and do the best that you can to answer the questions. I'm not going to spend an hour tomorrow morning going through the answers to each one of those questions. But if there's something in the questions that stirs a question that is you need an answer to, then bring that question tomorrow, and we'll go through it. So it's really for you to kind of remind, refresh, go through the last couple of days. The questions really are geared toward pulling out the basic principles and elements and fundamentals. That's what these first 2 days was about, so that we can move forward in doing trade planning and then actually taking trades. So
Okay.
tomorrow
Okay,
will be actual homework.
Okay, very good. So also we're getting a lot of questions about chart templates. We'll make sure that those are there. I think, if you have been listening to Mark for the last couple of days, he has a really well thought out path of delivery. So don't feel like it's something that that we're forgetting about. I have a feeling that his method here is to give you what you need when you need it, and you need to put a little trust in him to do that. So we'll make sure that you have all of the course content as it is revealed to you. Okay.
Couldn't have said it better myself. Well, thank you, everyone.
And thank
I
you,
think
Mark.
I'll be done, and we'll get the questions again tomorrow. Thanks for hanging with me. Is this really a 4-hour session? Wow.
Yeah.
Awesome.
Yeah. It is, which makes for a lot of video editing. So I'm going to get after it because I got about 20 emails yesterday asking for videos within 10 minutes, and I just couldn't do it. So
I can attest to everybody. It is hard to do the rendering and the editing. It is hard. And I'm just glad we still have 56, 57 people.
Well, it's hard to walk away from good content. So thanks again. We'll see everybody tomorrow. Looking forward to it.
All right. Take care, everyone.